Good morning, everybody. Hey, welcome to Thursday, Jobs Day, first time unemployment claims day, April 16th. I hope your week is going well. Yesterday was a little bit of a down day. We'll see whether we can rebound today as we get started. Hey, again, as we look at what the marketplace is doing and the stock market as a whole, folks, it is still time. You have time to make changes. Are we at the bottom? Nobody knows. We have not tested our bottoms yet. So now's the time to make sure that your portfolio lines up properly. Give us a call and let's make sure that you are in the right place at the right time. 863-382-0037. Hey, looking forward to our conversation today with Dave here in just a moment.
Cutting crude here. My name is Morning Dave. It's 20 here before 8. Or before 9. That's 8:40 here. I get on the wrong time zone sometimes. Time to check in on money and see what's going on Wall Street this morning. Downtown we go, or actually to an undisclosed location somewhere just out of town at his home. Phillip Statler from Statler Financial Services is here. Still fully connected though, right, Phillip?
Absolutely, Dave. Still fully connected, still working hard just from the house, making sure that our clients are well taken care of and serving them well. And we're here for everybody else, too, that may have concerns about the market or their current portfolio. We are working harder than ever.
Absolutely. It's kind of amazing, something we're all kind of learning, just how functional we really can be in a connected world. Working from home. I did not honestly think it would work, but our entire business operation has been operating off-site for the last, 2.5 weeks. It's working out all right. We're learning some things about ourselves during this crisis, aren't we?
Yeah, we are. And this part of it, what we're learning now is makes me think that there will be some things that we may not go back to but because of the convenience and the comfort.
Yeah, there are going to be some lifestyle changes made that are not even necessarily going to be health-related, and the health-related lifestyle changes are going to stick for a while. Setting the table here for the moment, and starting out this morning, yesterday was an off day. Dow was down by 1.86%, down 445 points yesterday. Standard & Poor's was down by a full almost 2.25%, down 62.7. And the NASDAQ was down by about 1.5%, down 123. And then we get to the data dump for the morning, and the lead in the bunch that everybody thinks about is the unemployment numbers. First-time jobless claims actually this time came in what the analysts were saying they expected for a change, right?
Yeah, at least within the range, right? So it depends on who you looked at. The first-time claims came in at 5,245,000 first-time claims. Now, the estimates, depending upon who you look at, were somewhere between 5 million and 5.3 million. So we were within that range. Some people, it's less than what they thought. Some people, it's more than what they thought. But it's still within that range of what we saw economists predict. And overall now, we're up to 22 million unemployed. And so basically I saw a headline. We've wiped out all the jobs we created since the last financial crisis.
Absolutely. It's a catastrophic effect. And as I've been saying all along, and the only good thing about the whole thing is we know what the cause is, and we know at least a percentage of those jobs will bounce back. Challenge, and you and I were kind of bracing ourselves for another one of those oh my God shocks with this week, is the fact that now the federal government says they're pretty close to running out of money on that payroll protection fund from the Stimulus Act. So we may end up not being done seeing the layoffs, right?
Well, that's true, Dave. We're still seeing big companies who don't qualify furloughing more and more people as this thing continues to last longer than they can afford. And so they're pushing their people out to the unemployment rolls. And then you do have those people who felt like, hey, I can keep them going. If I get the payroll protection plan money, I'll be good. And now that money's basically run out and they didn't get it. So I think we'll see another round of layoffs this week and next week.
Yeah, these catastrophic numbers are not over yet, and they've been projecting just astronomically high unemployment rates when we see the first of the month report. Some other macro data that came in. Housing is always a bellwether for the health of the economy, and housing starts fell like an absolute rock last month, 22% down.
Yeah, they really did. It was that was not a good sign. We saw housing starts down to 22%, like you said, which was down to 1.22 million. The expectation was 1.32 million. So basically 100,000 less housing starts than anticipated. Now the building permits, though, Dave, down 7%, and basically within reason. We expected them to be at 1.25 million, and they're at about 1.35 million. So they're a little better than expected right now on the permit side.
And the number of building permits does tend to vary widely month to month anyway. 7% isn't a catastrophic loss in building permits. It's the starts themselves that scare me down the line. But at the very least, folks are still making plans for when this thing is over based on the building permits.
Yeah, exactly. You're right. And that then leads to, you got to get permits before you get starts. And so starts being down, though, could indicate that people have decided between that permitting process and breaking ground, there's been a pause, right? We've paused, and we're not going to start yet until we get some certainty in this economy.
Understood. And we're crossing our fingers. It does just mean a delay instead of letting the permit run out and see the starts just stay permanently down. We talk about those Federal Reserve District business indexes. New York came out earlier in the week and set a new record for a negative number. All of these Federal Reserve districts calculate their numbers differently. So how this number actually was calculated is the turf of green eye shades. But the Philadelphia Fed listed their business index for their district this morning, and they showed it minus 56.6. That's the lowest it's been since 1980. Numbers that go into that aren't half as relative as the fact that it's an oh my God type low number, right?
Well, that's true. Obviously, not as bad as the Empire State manufacturing number, which hit a historic low, but still not a good number. But we know that the manufacturing plants are basically shut down for the most part.
Yeah, absolutely, and more are getting shut down the line. A big meatpacking plant up in South Dakota got shut down the other day when they had a coronavirus outbreak there, which put a ton of people out of work in a small state as well. It ain't fun at the moment is the bottom line. We've got a few reports from the quarterly indications from companies that are out there, and I've got some surprising big gainers on my list. Any of them out of quarterly reports?
Yeah, I'm not so sure that's the case, Dave. I've got a couple gainers, but let's start again with the financials. We had Morgan Stanley. They missed by 13 cents a share. Revenue came in below the forecast. They've had to really work hard to navigate this quarter because of the pandemic, and they say they're still in a good position from a liquidity standpoint. They're trading down 2.25% this morning after being down a little over 3.5% yesterday.
They're one of my pre-market losers, so that's up there.
Yeah, and then we got BlackRock. They're the asset management firm. They actually came out on the plus side. They beat by about 24 cents a share. Revenue was above what Wall Street had forecasted. They saw $35 billion in net inflows of assets, which is causing them some challenges. Their profit did fall about 23% from a year ago, but they're basically even right now after falling 3.25% yesterday. The other financial I have is Bank of New York.
That was because it's up this morning 45 minutes before it starts trading.
Well, it's because it really did well. It beat earnings by 17 cents a share, which is a pretty substantial deal, and revenue also topped estimates very well too. So both of those things were on the plus side. Their loss reserves, but they had to add quite a bit, but it's not as much as the other big banks, right? They had to boost it to 169 million. Last year, this time, it was only 7 million. So a substantial increase from a year ago, but nothing compared to some of the other banks we talked about yesterday. And let's see here. Where did I lose it at?
While you're looking, if I remember while I was just reading through other stuff, Bank of New York has always been regarded as one of the more conservative big banks out there. So it's not surprising they have to reserve less just because they're already healthy to begin with.
Exactly. So they're trading up 2.6% this morning after being down 4.7 yesterday.
Okay. Got some consumer goods out there. Before we went on the air, you mentioned you had a couple of brick and mortar retailers on the list.
We do have a couple here. Bed Bath and Beyond reported, and they came in at 38 cents a share, which was 18 cents ahead of estimates, which was good, and revenue also ahead. Now that was their fourth quarter from a fiscal financial standpoint. Their same-store sales, though, were down 5.6% because a lot of it happened. A lot of the shutdowns had to happen right at the end of the quarter, so didn't affect them from that standpoint a whole lot. But they're getting a really nice bounce. They're up 17% this morning after being down 17% yesterday.
Well, at least they fixed their yesterday problem, didn't they?
Yeah, they did. They did. So, and they're still hovering down like most retailers. They're still down close to their 52-week low at this point.
Understood. Got time for one more. What strikes the fancy?
Well, let's just talk two real quick. Costco raising their dividend. They haven't given their earnings yet, but they raised their dividend by 7% to 70 cents a share. On the downside, we've got Hertz Global seeking help from the government in order to avoid having to go into bankruptcy. So obviously, Hertz down 5% this morning, Costco up 1% right now.
Travel and business sensitive industry that I wouldn't be shocked by. Again, resetting the table, down day yesterday. Futures markets, I'm looking green in my delayed quotes, Phillip. Where are we going 45 minutes before we open?
We are green day, but they are, let's just say they've been higher and they've been lower. They've been all over the place this morning. So at this point, though, we've got the Dow up about 0.2% to $44. We've got the S&P 500 up 0.33%, about $9, and then we've got NASDAQ up 0.8%, $67. So we're in green ink right now in terms of the indexes. If we look at the commodities side, we've got silver up 1.5%. We've got gold up 0.7, and we've got crude oil closed really down yesterday, but it's up 1.6% this morning to $20.19 a barrel.
All righty. In overseas markets, Japan was affected by our close yesterday. So was Hong Kong. Asian rim markets generally off early this morning. European markets are benefiting from our futures, and they're up fractionally this morning, halfway through their day. Phillip, this is a weird time. Somebody that needs to get advice to figure out how to keep retirement happening for him needs solid advice from an unbiased source. How do I reach out and touch you in these weird times?
Hey, then give us a call at 863-382-0037 or to schedule a phone call, a Zoom meeting, virtual meeting to go through their portfolio and start the process for our financial x-ray. They can follow us on Facebook at Statler Financial Services, where we repost this show every day, plus links to our radio show and other things that come up, we post there. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on your sister station, News Talk 730 a.m.
All righty, and back here again tomorrow morning with an up-to-the-minute look as to what's happening for the moment. Phillip, thank you so much. We'll catch you tomorrow.
All right, buddy. You have a great day. Stay dry today, and I'll talk to you tomorrow.
We'll do our best. Have a good one. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Remember that first paycheck when you started working all those years?
Hey, folks, let me say thank you for joining us today. Hope you got a little bit of information out of there that can help you and give you some information about how our economy's looking right now. Remember, our financial x-ray can help you determine where you are and where you need to be. Now, give us a call and let us walk you through those steps for your financial x-ray. 863-382-0037. Give us a call. Get on our schedule for a 10, 15, 20-minute phone call, and we'll start that process. Hey, guys, have a great day, and I look forward to speaking to you again tomorrow.